Hello, it's Matt Bennett with the Grain Marketing Update here on Tuesday, December 2nd. I'm actually in Indianapolis at the Beck's Dealer Extravaganza. So some of you that watch this will probably see me within the next few minutes, or you'll look back on it and say, hey, that's what he was wearing that day. But don't have any slides here today. I just want to talk a little bit about the markets and how they're set up and some of the dynamics that I see. If you looked at the newsletter over the weekend, I talked a little bit about, the fact that both corn and beans actually gained some ground last week. Saw corn with a 10-cent gain, and you moved December 26 corn back up closer to 470. And as we talk here today, I mean, we've actually seen D's 26 is traded up to 469. That's pretty much where it's at as I'm doing the video. And so, look at it from a cash perspective, a look at it from a new crop perspective. And I think whenever it comes to corn, one thing we got to remember, this time of year, there's not as much corn moving. A lot of people have locked their bin doors, don't really want to do anything at this point. And so with that being the case, there's always some basis opportunities. Of course, it's going to be regional. Some of you will have better opportunities than others. I've talked recently about some people in northern Indiana getting a 40 over basis for quantity. And so if you've got corn in the bins, by all means, we need to be shopping these bushels around just a little bit. I know most of you are probably not ready to move a lot of corn yet, but I'm assuming that you want to at least core your bins at the very least. And so, those of you that got bags on the ground, typically whenever you get a chance to get those bags off the ground, that's the first step that moves. And by all means, what we've seen recently is that, the posted bids don't look too bad for the size of crop that we supposedly have, but pushes have been going on all over the place. And so does that mean the crop's smaller? I would assume that the crop's a little smaller than the USDA said. We are going to get a December report from the WASD, from USDA. Here's the deal with the December report. Typically, it's one that the USDA kind of takes off, so to speak. It's almost always the same numbers as November. Given the fact that we had October off, I'm assuming that this December report will have some revisions, and I'm hoping that they'll have some revisions, because if we don't, you're looking at a massive data dump again in the month of January. The predominant majority of you that have responded to me have said that your crop was good, not quite as good as last year. I'd say 75% of the people that I've talked to have said that. There's been some people that have said we had a record crop. And then there's been a few people that said it was not a good crop. And so if most people are saying it's a little under a year ago, boy, we got to be really careful to say it's 179 and change that USDA said last year. And here's why. If you looked at the quarterly stocks report at the end of September, they actually came up with 200 million bushels more corn. That tells me last year's yield was actually higher than the 179.6, I believe, is what they came up with. It's probably closer to 181. So, if it was a 181 crop, could we be looking at something below 181 for this year? I don't think you see it in December, but by all means, I think 186 is probably a shade too high. I think the bigger function of basis, though, has a lot more to do with the farmer being very reluctant as soon as they got that crop put in the bin, not really ready to do anything with it yet. And so I think you've got opportunity. It's going to be over the next few weeks here. We saw some of the December contracts actually get filled in November because they were pulling corn in a little bit early because just not enough corn was moving. But we all know that in the month of January, there's going to be a ton of corn move. So if we've got some cash needs coming up and we want to go ahead and turn some of this corn into cash, I've got to think there's a push that's going to happen here that you're not going to see near the basis push that you see right now once January rolls around, because there's going to be a heck of a lot more bushels moving around. As far as new crop goes, I talked about this some, and some people wanted me to elaborate on it. So if we would go ahead and hedge December corn right now in this 470 area, again, we're at 469 at the time we do this video, 470 or above. If we looked at the market this past fall, basis was running, or the carry was running from D's to July, 30 to 35 cents most of fall. If we have any sort of a decent sized crop this next year, carry should be pretty strong from December to July over the fall time period. If that's the case, you could roll that D's 470 hedge out to July at some point and work your way into $5 corn. And so, how do you do that? I mean, basically, you're going to buy your December hedge back, then you're going to turn back around and you're going to sell July on the board whenever there's carry. I don't care if D's corn at the time is 465 or 455. It doesn't matter what it is. Whatever the carry is from D's to July, you're going to buy D's back, sell July. If the market has gone down, you made money on your December hedge, and maybe July corn is only 485 at the time. But if the carry was 35 cents, you've got yourself 505 corn basis the board. And so that's something we can do on some bin bushels. If you want to talk to me or one of the people on my team in more detail about that, that's certainly a nice strategy for a portion of bushels. I don't want to get, as you know, probably after watching me, I like to stay very flexible, whenever it comes to my hedging. As far as soybeans are concerned, I mean, soybeans here today are mixed, not really doing a whole lot. Corn's actually having a little bit better day than soybeans. Earlier in the day, we actually saw soybeans higher than we saw them lower. We got like 10-12 cent range on different contracts here. But, whenever I look over at, for instance, November 26 beans, I mean, Nov 26 beans, 11.24 on the board. That's not a terrible price. I'm not saying that we want to get too aggressive, but what was the carry from Nov to July in the middle of fall? At one time, it was 65 cents. So, if you would go out and hedge some beans wherever you want to pick, 1130, 1140, can we get those price levels? I think we've got a shot. But even if it was today and you want to put the offer out there at 1125, there's a pretty real chance on bushels going in the bin that you could actually roll that hedge next fall. Maybe you have a 65, 70 cent carry. You're going to work yourself very close to $12 beans. And so, by all means, bushels going in the bin, we can manufacture a better price, but we can't do it by sitting on our hands. As of right now, July corn versus the D's, you're looking at about a 20 to 25 cent carry, depending on what day it is. Should we just go ahead and hedge July? I've had people ask that. That's fine, but do I think we can pick up another 10 cents? Absolutely. I think you can pick up another 10 cents. Is it worth it? Personally, I think that it's worth it, especially when we've been fighting for pennies over the last couple of years. If we can pick up a dime on 250 bushel corn, it's 25 bucks an acre. I don't think it's anything we need to sneeze at. So, again, continue to send your questions to me. I appreciate those of you that asked about this hedging deal. Those, again, would be bushels going in the bin that you want to hedge for next fall. By all means, I'd be paying attention. As far as cash beans go, real quick, on cash beans, again, we're not seeing quite as much push. It depends on how close you are in proximity to a crush plant. We're finally starting to see some of these export sales turn into a shipment here and there. Are we going to see China step in and buy all the 12 million metric tons? That's the question of the day. My personal opinion is that they will do so. And, it's not political in nature, but I think what it boils down to is the reason that China agreed to do this is because they want to get tariffs on the goods they're selling into the U.S. To drop. And whenever those tariffs drop, they feel like they'll actually make more money selling goods into the U.S. than what they'll have to pay more for beans. Because, yes, U.S. beans are still more expensive than South American beans. Most of your estimates for this new South American crop that's going to be coming out, after the first of the year, Brazil, a lot of 170, 175, 180. They're expecting a massive crop in Brazil. The only place you've got a weather issue right now is in Argentina and southern Brazil, which has trended on the warmer and drier. With La Nina still in place, there's a decent shot that that's going to continue. So maybe it'll take the shine off of South American production as a whole. But as of right now, Brazil looks to have a pretty decent sized crop. So if I'm looking to market some beans, probably got some offers out there because, of course, this market's been very volatile. We've had opportunities, but by all means, you got to have your offers in place because sometimes those things can fill on the overnight market. And if you don't know it, it's pretty tough to catch it in the morning. Sometimes that opportunity's gone. So again, incremental sales, I'd keep some flex more so on corn than beans. I think that you've got an opportunity here to turn some of these bushels into a little bit better price than what your posted bids are. So keep the questions coming. Appreciate all the feedback and have a great week.